As a minister, you may have different sources of income and expenses that affect your taxes. In this section, we will discuss how to manage your income and expenses as a minister and how to report them on your tax return. First, let's talk about your income. You may receive income from your church or organization as an employee or as an independent contractor. You may also receive income from members of the congregation for performing personal services, such as weddings, baptisms, or funerals. All of these income are subject to income tax, but the way you report them may vary depending on your status. If you are an employee of the church or organization, you should receive a Form W-2 that shows your wages and any withholding. You should report this income on line 1 of Form 1040 or 1040-SR. However, if you also receive a housing allowance or a parsonage from your employer, you may be able to exclude some or all of it from your gross income. A housing allowance is an amount paid to you as part of your compensation to rent or provide a home. A parsonage is a home provided to you by your employer as part of your compensation. The amount you can exclude is limited to the fair rental value of the home, including utilities, or the amount actually used to provide a home, whichever is lower. The amount excluded cannot be more than reasonable compensation for your services. You should report the housing allowance or the fair rental value of the parsonage in Box 14 of Form W-2. You should not include this amount in line 1 of Form 1040 or 1040-SR. If you are an independent contractor of the church or organization, you should receive a Form 1099 NEC that shows your non-employee compensation. You should report this income on Schedule C, Form 1040, Profit or Loss from Business, Sole Proprietorship. You should also report any income you receive directly from members of the congregation for performing personal services on Schedule C. You cannot exclude any housing allowance or parsonage from your gross income if you are an independent contractor. Second, let's talk about your expenses. You may have various expenses related to your ministry that you can deduct on your tax return. However, the way you deduct them may differ depending on whether you are an employee or an independent contractor. If you are an employee of the church or organization, you can deduct unreimbursed employee expenses as an itemized deduction on Schedule A, Form 1040, Itemized Deductions. These expenses include travel, meals, entertainment, gifts, professional dues, subscriptions, books, and other expenses that are ordinary and necessary for your work as a minister. However, these expenses are subject to the 2% of adjusted gross income limitation, which means that you can only deduct the amount that exceeds 2% of your adjusted gross income. If you are an independent contractor of the church or organization, you can deduct business expenses on Schedule C, Form 1040. These expenses include the same categories as above, plus any expenses for your home office, car, equipment, supplies, and other expenses that are ordinary and necessary for your business as a minister. These expenses are not subject to the 2% limitation and can reduce your taxable income and self-employment tax. Third, let's talk about self-employment tax. Self-employment tax is a tax that covers Social Security and Medicare taxes for self-employed individuals. As a minister, you may be subject to self-employment tax even if you are an employee of the church or organization. This is because ministers are considered self-employed for Social Security and Medicare purposes unless they have requested and received an exemption from the IRS. To calculate your self-employment tax, you need to use Schedule SE, Form 1040, Self-Employment Tax. You need to include all of your net earnings from self-employment as a minister in Part 2 of Schedule SE. This includes your wages from Form W-2, excluding any housing allowance or parsonage, plus any net profit from Schedule C, including any income from personal services. You can deduct half of your self-employment tax as an adjustment to income on line 14 of Form 1040 or 1040-SR. If you have requested and received an exemption from self-employment tax as a minister, you do not need to file Schedule SE or pay self-employment tax on your ministerial income. However, this also means that you will not receive any Social Security or Medicare benefits based on this income. As you can see, managing your income and expenses as a minister can be complicated and requires careful attention to the tax rules. If you need more guidance or assistance with preparing your tax return, please consult a qualified tax professional. How to plan for your retirement goals and lifestyle. If you are a minister who wants to retire early and enjoy financial freedom and sunshine, you need to have a clear plan for your retirement goals and lifestyle. Retirement planning is not a one-time event, but a continuous process that evolves over time. Here are some steps you can take to plan for your retirement goals and lifestyle. 1. Determine your sources of income. As a minister, you may have different sources of income in retirement, such as Social Security benefits, pension benefits, retirement savings accounts, rental income, royalties, or part-time work. You need to estimate how much income you can expect from each source and how long it will last. You also need to consider the tax implications of your income sources, especially if you have opted out of Social Security or have a housing allowance. 2. Create a retirement savings program. To retire early, you need to save more and invest wisely. You can use various types of retirement accounts, such as 403(b) plans, 401(k) plans, IRAs, Roth IRAs, or HSAs, to save for retirement and enjoy tax benefits. You should also take advantage of any employer matching contributions or other incentives that may be available to you. You should aim to save at least 15% of your income for retirement and increase your savings rate as you get closer to your retirement date. 3. Estimate potential retirement expenses. To enjoy financial freedom and sunshine in retirement, you need to have a realistic budget that reflects your desired lifestyle. You should consider your essential expenses, such as housing, food, health care, insurance, taxes, and debt payments, as well as your discretionary expenses, such as travel, entertainment, hobbies, gifts, and charitable giving. You should also factor in inflation and unexpected costs that may arise in retirement. 4. Manage risk. Retirement planning involves managing various types of risk, such as longevity risk, market risk, inflation risk, health risk, and sequence of returns risk. You should have a diversified portfolio that matches your risk tolerance and time horizon, and that can generate enough income and growth to meet your retirement goals. You should also review and rebalance your portfolio periodically to maintain your desired asset allocation and risk level. You should also have adequate insurance coverage and an emergency fund to protect yourself and your family from unforeseen events. 5. Manage current and future assets. As you plan for your retirement goals and lifestyle, you should also think about how you will manage your current and future assets. You should have a will and other estate planning documents that specify how you want your assets to be distributed after your death. You should also have a power of attorney and a health care proxy that designate who can make financial and medical decisions on your behalf if you become incapacitated. You should also review and update your beneficiaries on your retirement accounts and insurance policies regularly. 6. Review and adjust your plan regularly. Retirement planning is not a set-it-and-forget-it activity. You should review and adjust your plan regularly to reflect any changes in your income, expenses, goals, lifestyle, health, family situation, or market conditions. You should also monitor your progress and performance and celebrate your achievements along the way. By following these steps, You can plan for your retirement goals and lifestyle and retire early as a minister with financial freedom and sunshine.